Hello friends, welcome to learning sessions, and today in this video we are going to discuss about the retail liability product in detail related to the module B of Rbwm. And if you want to get all the previous lectures of Rbwm, do sign up right now and do subscribe to our channel right now and press the bell notification icon so that you get updated whenever we upload the new videos. The full courses for Jaiib, all the 4 papers is available on our website jaib.learningsessions.in, and there is a good news for you that on just sign up you'll be getting access to all the PDFs of all the 4 papers of Jaiib. So do sign up right now and start preparing for the same. So let's start the session over here, and it's related to the important retail product liability products over there. Now what do you mean by liability? When we are talking about the liability, it's actually related to the deposits the bank has received. Now when the deposit is received, there is a liability on the bank so as to basically repay that amount to the particular depositors over there, right? Now let's understand the important points related to opening of current account. First of all, it's related to acceptance of cash and checks over there. Now let me just tell you about the retail products over there, retail liability products over there. When we're talking about the liability products, we are talking about the demand deposit, or we're talking about the term deposit over there. In demand deposit, we are having the current account and the saving fund account. In term deposit, we are having the recurring deposit or the fixed deposit. So we are going to discuss each and every rule related to the same. Let's discuss the same, and let's begin it with the current accounts over there. So first of all, it's related to acceptance of cash and check. So when a current account is being opened, banks particularly do accept both the cash and check as the initial deposit over there. And further, the banks can also be accepting the checks of other banks. Let's say case initial deposit is to be made. In that scenario, if the particular customer is saying that the person is going to transfer the funds over there from the existing account to the new account over there, that is also allowed. And further, it's related to verification of the credit facilities. Now bank needs to ensure that the particular current account holder, the prospective current account holder, is not having any kind of outstanding credit facilities with the other banks or branches over there. And in case the current account holder is having the exposure lesser than 5 crore. Let's take the scenario that person A came to you so as to open the current account, and also he has availed the borrowing services or particular loan services from the other banks which are lesser than rupees 5 crore in the form of CC or OD by the other banks over there. In that scenario, the borrower in first hand must be informing the bank with which the customer is going to open the account over there. And also, when the amount will be surpassing 5 crore rupees, the borrower must be intimating this to the bank over here, right? And further, if the borrower is having the exposure of rupees 5 crore or more, in that scenario, borrowers can maintain the current accounts with any of the banks in which they are having the CC or the overdraft facility. Let's say the case the borrower has particularly taken the exposure from bank A, B, C, D. Now in that scenario, wheresoever the CC limit or overdraft limit is there, the borrower, let's say XYZ is there, they can open their current account with them, right? That is the provision related to it. But there is one condition related to it, that at least 10% of the exposure of the banking system to that particular borrower must be there. Let's say case total borrowing with XYZ was 20 crore. Now in that scenario, minimum 10% borrowing in form of CC or OD limit must be with bank A, B, C or D, where XYZ is having the intention so as to open the current account, right? And further, other lending banks may also open the collection account. Let's say case where the exposure is lesser than 10%, there the other lending banks can be opening the collection account where the funds will be deposited so as to collect the amounts for the recovery against such particular loans, right? And further, it's related to monitoring of the newly opened accounts. When we are talking about the newly opened accounts, first of all, the question comes to my mind that's related to KYC rules and regulations. So those must be followed when we are opening the account, when we are monitoring the accounts over there. And further, in case the third party credits are allowed. Now, what do you mean by third party credit? Let's say case the account was opened in name of A and the initial deposit was deposited by the other person. Let's say person B deposited this amount. That is the third party credit. Now, when the third party credit is allowed in the newly opened account, in that scenario, the genuineness of transaction must be validated by the bank end over there. and except for the exceptional circumstances, the instruments like checks, dividend, interest warrants, refund orders, crossed account paychecks, they must be invariably be credited to the pays account only and should not be encashed, right? That must be taken in and mind over there. Like you received a account paycheck over there. It's not the case here that you can be paying over the counter. You should be paying attention to the same. And every account holder must be supplied with the statement of accounts, right? Statement of accounts every month without any charge. The statement must be given to the person. After that, it's let you transfer of accounts over there, and these recommendations are as per the Damodaran Committee on customer service by IBA, that is Indian Bank Association. Basically set up a committee in the name of the Modern Committee, and they give the recommendations, and for the IBA also give the directions for the same, so as to implement the facility where the account number must be portable. It means what? It means that the customer is allowed to maintain the same account number, in the bank, even if the customer is moving to another city or shifts the account to another branch in the same city over there. Even in that scenario, the customer must be allowed to use the same number over there, same current account number over there. Let's say case person is moving to another city or to same branch in the same city over there, same account number can be portable, right? And for the that recommendation was given by Damodaran Committee. For the related to inoperative accounts, now those accounts where there was no transactions for 2 years other than the system transactions or the credit transactions over there, system credit transactions over there, if there was no particular transaction, the account is said to be inoperative account. And further, such account can only be made operative if the person wants to make such account operative. Such account can only be made operative if the bank is particularly satisfied with the reasons of non-operations, that why such account was not operable for such particular period, and also the fresh KYC is to be done. Fresh KYC is to be done in that scenario. Okay, after that, it's related to closure of current account. So whenever a customer basically wants to close the account, bank definitely will be wanting so as to ascertain what are the specific reasons that why the customer wants to close the account over there, and definitely the bank will be persuading that the customer must be continuing the account. But wheresoever the bank has actually received a letter related to closure of the account over there, duly signed by all the account holders of the partners, bank must be complying by the same, right? After that, it's related to the saving deposit, right? We have covered about the current deposits and for the current accounts over there. Now it's related to the saving deposits. Now banks actually the bank accounts that are designed to help the individuals so that they can save the money. It basically cultivates a habit of saving the money in that particular form. So people actually can be depositing the money. Let's say case person want to save money, so the person A will be depositing the money in the account, and it's a saving fund account where a little amount of interest will be paid. In case of current account, no interest is paid as per the Reserve Bank of India rules and guidelines, but in the saving fund account, interest is actually paid on the amounts over there, and on daily basis the interest is calculated, right? So these accounts offer a safe and secure place. So definitely these offer a safe and secure place over there. And what are the other advantages? First of all, it encourages the saving habit, and further also it enables the depositors to earn income. The depositors can be earning income on these particular parts over there. And further, this basically these accounts, if a person is actually depositing the amounts in such accounts over there, it basically indicates the salary of such person over there. And saving account passbook act as identity and residential proof over there. And further, other facilities like electronic fund transfer can be done in that particular account over there. So such facilities are also available. And further, it also allows you that you can be doing the online shopping further through the internet banking or such facilities which are available in such account. And what are the advantages and importance to the bank over there? Definitely it's an important component, as I told you, that the current account and saving account are part of CASA. These are part of CASA, and these basically form part of the core deposit over there. It is very lesser volatile, and moreover, the particular interest, the particular amount is available, particular amount of fund is available with the bank at a very low cost. So low cost funds are available with the bank over here. That's the second benefit related to it. And further, the banks can be earning more spreads over there. Definitely, if low interest bearing deposits with the bank over there, banks can be earning much more spread over there. And it basically provides bank with the potential customer base for marketing purposes, where bank can be cross selling the other products too, right? And who can be opening a saving account with bank? Now basically a person who is legally capable so as to enter into a contract, they can be opening a saving bank account with the bank over there. It's not only the case of individual, but also in case of trust or particular HUF, they can also be opening the saving fund account with the banks over there, right? And the application must be submitted to the banks in a proper manner, and the applicant must be accepting the terms and condition, and the account will be opened. They have to basically abide by the rules and regulations of the bank over there. Now let's understand the saving account of a minor. Now let's say case that there is a person minor who is actually having an age lesser than 18, which is the age of maturity as per the section 3 of the Indian Majority Act. In that scenario also, the Negotiable Instrument Act actually does provide that the minor can be opening the account, and further if the minor is age 10 or above, the person can open a self-operated account. They can be opening a self-operated account over there. And further, if the person is lesser than the age of 10 or particularly even more than age of 10, they can be opening a under guardian account. Under guardian account can also be opened, but in case of under guardian account will be operated by the guardian only, and in case of self-operated account, the account can be operated by the minor itself, right? And further, the nomination, if we talk about the nomination rules, the nomination is not available in such case where there is self-operated minor account over there, but where the guardian is operating the account, their nomination is available. In that scenario, the nomination facility is available, and further the guardian can be nominating the person on his or her behalf, right? That's the second scenario. And further, whensoever a contract is made with minor, that is actually void ab initio, because the minor cannot be entering into contract over there. But in case the contract is actually related to supply of necessities of life to a minor over there, that's actually a valid contract over there, right? And as I'm just telling you that as per the Reserve Bank of India directives, it is allowed that minor can be opening account of their own name if they are age 10 or above, right? And further, minor must be able to read and write. There is an important condition related to it. And further, AF is to be signed by the minor in presence of the bank official who is able to identify the minor. And a checkbook facility can also be provided. If a minor asks for a checkbook facility can also be provided. And further, if the person is literate, only then the checkbook facility will be given. And let me tell you, when the minor is having a, let's say, age up to 14 years, and further the maximum balance that can be maintained in the minor's account, that should not be exceeding 1 lakh rupees in case the age of minor is particularly up to 14 years, and further it's a self-operated account. The credit balance in the account cannot be exceeding rupees 1 lakh. But where the age is above 14, there is no such limit related to the maximum balance. So this makes it a very important point to understand, because such points can be asked in the exams directly, right, in the form of question. And in respect of minors who are aged below 10 years, account must be opened in the name of guardian. So it will be a joint account with the guardian over there, which will be operated by the natural guardian or testamentary guardian, or particularly other guardians, right, or legal guardians, right? And further, it's related to the saving bank account of illiterates. Now, if we are talking about the illiterate person, saving bank accounts who can basically otherwise are capable of entering into a contract, they can be opening a account over there, saving fund account over there. They can be affixing their thumb impression on the account opening form in the presence of the approved witness who is known to the bank and also known to the applicant over there. So this is an important clause related to the witness is required. So witness is required so as to open the account of an illiterate person over there. And for withdrawal person, the illiterate person must be coming. They must be coming themselves. They must be coming personally over there. They have to affix the thumb impression in the presence of a officer, right? And no checkbook facility, kindly please note it down, no checkbook facility can be extended to the illiterate person. That cannot be given in the account of illiterate person over there. And joint account of illiterate person can be opened. Kindly please mark it down. The joint account can be opened in case of illiterate person with a literate person who is close relative. We are talking about father, son, husband, wife, mother, daughter, etc., right? So with them, the joint account can be opened, but not with the unknown parties, with the close relatives only. The illiterate person can be opening a joint account, right? Further, it's related to saving bank account of blind person. Now, blind person are fully competent and they're not barred by any of the law that they cannot be entering into a contract over there. So there is no legal bar to basically opening saving bank account of a blind person over there. Okay, and further, in case of a blind person, both the signatures and thumb impression, kindly note it down, both the signature and thumb impression, even if the person is literate or illiterate, the thumb impression and further particularly the signatures both are to be obtained. In case of illiterate, only thumb impression is to be obtained. That must be obtained on the account opening form, and further it must be done in the presence of the bank officials which have basically duly witnessed by a respectable person. So whether it's a case of illiterate person or it's a case of blind person, the account opening form must be witnessed who is actually known to the blind person and also known to the bank over there, right? And further, it's related to saving bank accounts of incapacitated, handicapped, old or sick persons. So bank may entertain the request from the handicapped persons, such as persons who have actually lost both of their limbs or both of their hands. In that scenario, the person can be putting their toe impression or particularly their thumb impression either right or left hand side, so on the relevant forms over there, right? And for this must be done in the presence of branch manager, joint manager, department head or a witness over there, right? And further, it's related to accounts of Pardanishi woman. It's very much important. Kindly please note it down. This point is actually quite important in case of Pardanishi woman. As per the rule, any contract which is entered by a Pardanishi woman is actually not a contract free from all the defects. So they may present some of the defects in such kind of contract over there, because a presumption of undue influence always exists in that scenario. And further, banks must be taking the utmost care whensoever the account opening form of such persons are being opened, and at least witness of two respectable person must be taken who are known to the bank, and further who can invariably attest the signatures of the account opening form and on withdrawal by the withdrawal slip. So whensoever the Pardanishi woman is there to open the account, that must be witnessed, and whensoever they are particularly there, so basically withdraw the account, that must also be witnessed. The signatures must be attested, right? And further, it's related to saving accounts for non-individual entities. So when we're talking about the non-individual entities, we are talking about, let's say, primary cooperative credit societies, or we are talking about the KVIs over there, or we are talking about the agriculture produce market committees over there, or societies which are registered under the Societies Registration Act, or particularly the SHGs, farmer clubs, government department bodies. They are actually allowed to open the saving fund account. They are actually allowed to open the saving fund account, that is actually allowed to them. Further, it's related to the maintenance of the balance and interest payment. This is quite important from the exam question point of view. Let's have a look at it. So basically, when a bank account is opened, the bank actually specified that whether you are to basically maintain a minimum amount over there or minimum average balance which is to be maintained over there, that is actually specified. And most banks actually do insist that that monthly average balance must be maintained, and further, if that balance is not maintained, in that scenario they will be charged a penalty, right? So that's a condition with it. Now let's have a look at it. As per the different rulings, it was basically discussed, and further it was described and prescribed that banks must be calculating the interest on daily basis, right? So we are given a scenario of a passbook over here. Here we are given a different entity, set of different entities. That on 1st of April 2021, the cash was deposited rupees 10,000, the balance is 10,000, and 4th April 1 lakh rupees were credited again, and further withdrawals of 20,000 and 2,000 were made on different dates, and further 5,000 was again credited on 20th of April, and further withdrawn amount of rupees 1,000 on 30th of April. And we are to calculate the interest rate on the saving bank account at 3% per annum. Now in that scenario, we are to calculate that this particular 10,000 rupees was there for how many days? For 1 to 3 up to 3rd of April. Up to 3rd of April, that is for 3 days, the balance was rupees 10,000. And further on the 10th, the balance is now on the 4th of April, the balance is now 1,10,000, and up to for 2 days. For 2 days, that is for 4th and 5th of the day, the balance for 2 days, that basically was 1,10,000 over there, right? And further on 6th of April, the withdrawal of 20,000 was there. Now 90,000 was basically there for 1 day. For 1 day, the balance remained was 90,000, and for the from 7th to 19th, that is almost for 13 days. That is almost for 13 days. The balance was 88,000 rupees. The balance was 88,000 rupees, right? So this particular table we have basically sorted out, and further we have basically created this table from the same table above, from the same data given above, that on these days this particular transaction amount was there, and particularly this balance was maintained for these number of days. This was basically maintained for these number of days, right? And further we basically calculated the product of the same, like balance into number of days, that is 30,000, balance into number of days, again we calculated the same, and the total came out to be 25,06,000. So that was the total amount that we calculated. Now how we can be calculating the interest part over there? Simply multiplying whatsoever the interest which is applicable, like 3% of interest is applicable, so it is 25 lakh and 6,000 over there. 25 lakh and 6,000 over there, multiplied by 3%, that is 3 divided by 100, and further per day interest is given for, because on daily basis interest is given, so 1 divided by 365, and accordingly we calculated the total interest amount monthly. We calculated the total interest amount, and it calculated to be 205.97. It calculated to be 205.97 over here. And similar way monthly average balance can be calculated. That will be 25,06,000 divided by number of days, that is equal to 30. So the monthly average balance was 83,533. So if you were asked in the question, you were given some data that this balance was maintained, and you have to calculate the interest rate at 3.5% or 4%, accordingly you can easily calculate. And also if you are basically asked to calculate the monthly average balance, you can be easily calculating it, right? So that is the fundamental related. And after that it's related to the time deposits. So when we are talking about the time deposit can be there for a time period ranging from 7 days to 10 years. That is for 120 months over there. That the 7 days is the minimum period and 10 years is the maximum period. But in case of exceptional cases, like let's say a special order is given by the court over there, in that scenario the FDR can be opened for a longer duration also, right? So that is the case related to it. So the minimum period is 7 days and the maximum period is particularly 120 months over there, and efforts should be made that to accept the deposits for a period of multiple of 3 months over there, like for 15 months, 18 months and 21 months and so on. The efforts must be made, but there is no particular criteria related to the same. And now let's have a look at the operational instructions. Either it can be single operational account, like person has opened a saving fund account in its own name, that is singly operated account. And let's say case A and B want to operate it jointly, that both of them will be operating it jointly, that is actually the joint operation. Now in case of joint operation, whether the premature withdrawal is required, whether the maturity amount is to be taken, both must be present over there, so as to operate the account. That's a joint operation over there. And when we are talking about the either survivor, on maturity, any of the party can be operating the account. But if there is a premature withdrawal, that can be jointly only. And also let's say the case that A and B are operating an FDR on either or a survivor basis, right? And particularly let's say person A was deceased, and it was either in survivor operation. In that scenario, person B can be operating the account singly. Okay, they can be operating the account. They have the actually right to operate the account singly, right? In case of the either survivor parties. And let's say case if there were multiple parties, let's say case A, B, C were multiple parties over there, and let's say person A was deceased. Now B and C, the survivors can be operating the account at their will. But in that scenario, the premature withdrawal is to be made, that is to be made jointly over there. But on maturity, either of them can be operating the account, right? Further, it can be the scenario related to former or a survivor. Former or survivor basically indicates, let's case A and B are having the former and survivor operations, where A is former and B is survivor. Now in that scenario, till A is alive, S, that is person B, survivor, they won't be operating the account in any manner. But only after the death of the former, the survivor can be operating the account, otherwise not. So while the former is alive, survivor does not have any kind of the operational rights or control over there, but only after the death of the former they will be having the rights to basically operate the account so as to control the account, right? And for the former survivors jointly or last survivor over there, if the primary account holder passes away, that is a former passes away, the surviving account holders assume the joint control. If we say that the multiple persons were there and former and survivor condition was there, in that scenario A is a former. If A dies, in that scenario B, C, D, they are to operate the account jointly and they will be having the joint authority over the account over there, right? And further, that's the scenario. Now let's understand the interest on fixed deposit. Now interest on fixed deposit is paid at quarterly interval, and customer is actually having the option that they want the interest to be reinvested further, or particularly they want to take back the interest. Like it may be the case that you have done an FDR of rupees 1 crore and you are going to receive, let's say, an amount of rupees 50,000 per month. 50,000 per month. There is an option with you that you want to reinvest this particular amount in the FD itself. If you want to reinvest this amount, then this is said to be cumulative FD or compound interest deposit over there. And further, if you do not wish to basically reinvest this amount and want the withdrawal of this amount, in that scenario, it is said to be the simple FDR. In that scenario, it is said to be the simple FDR. Okay, so that's the case. Further, it's related to term deposit account of minor. Is it allowed? All the terms and conditions are all the same in the case of minor also. They are also allowed that they can be opening a term deposit account over there. And for the mode of operation of time deposit. Now, let me just tell you, if the total of the amount of the deposits, let's say case principal plus interest if any credited, and excluding interest if it is paid if any previously, right? So if the principal plus interest amount is basically exceeding rupees 20,000, is exceeding rupees 20,000, the repayment should be made by a means of account pay or banker's check or draft over there, or by creating the account of such depositor over there. That means the cash payment is not allowed over there. And let me tell you that payment of interest on non-business working day, let's say case that you basically made FDR on 15th of July 20 and further 23, and further it is for 1 year and it is going to mature on 15th of July 2024. But let's say that from 15th to 17th of July there was banking holiday. Now in that scenario, the interest for this particular period, that is from 15th to 17th of July, will be paid at contracted rate of interest. So let's say what the contracted rate of interest was 8% per annum. Now in that scenario, for these particular dates also, the interest will be paid for the contracted rate period over there, right? And that's the scenario. So interest is calculated on the original contracted rate over there and is accrued based upon the number of days over there and will be paid accordingly, right? Further, it's related to deduction of TDS, that is a tax deducted at source as per the section 194A over there, right? So section 194A over says over here that whatsoever the interest component that is paid on the FDR, a TDS is to be deducted. And further, whether it is singly operated or jointly operated, the first name of the person must be considered. Let's say case A and B are having the former or survivor account or either a survivor account. In that scenario, the first name holder A will be considered only. And further, if the total interest that is being paid to the person A, being person A a senior citizen, and the amount of interest being paid to person A is exceeding 50,000 rupees in the financial year, in that case the TDS will be deductible. And further, for the other persons who are not senior citizen, that is lesser than age of 60, and the total interest being paid in the same bank is greater than 40,000 rupees, in that scenario TDS will be applicable. Now wheresoever the PAN card is furnished, then 10% of the TDS will be deducted accordingly. And when the PAN card is not submitted, particularly submitted over there, in that scenario 20% of the TDS is to be deducted, right? So that's the case. And further, a declaration can be given by the individuals in the form of form 15G or 15H. The senior citizens do submit the form of 15H, and normal users, that is non-senior citizens, do submit form 15G over there. And what does it indicate, and what is the declaration it is all about? It's a declaration about that whatsoever the interest we are being receiving our total income from all the resources is basically under the taxable income slab, and that's why the TDS should not be deducted. That's why the TDS should not be deducted, right? So those who have income within the exempted limit over there, they intimate the bank that do not deduct the TDS, and this 15G form and 15H form must be submitted for each and every financial year. Further, it's related to deposit of TDS. So now whatsoever the TDS will be deducted by the bank, let's say case TDS is deducted by the bank for those citizens who are aged below 60 years and for the receiving total interest amount greater than 40,000 over there, and also for the senior citizens who have received this interest for greater than 50,000 over there, the TDS is to be deducted and it is to be deposited up to the 7th of the next month, up to the 7th of the subsequent month over there, it is to be deposited with the central government, right? And further, let's understand the advances against banks on time receipts over here. Now, as per the Reserve Bank of India guideline, let me just tell you, it is strictly prohibited. It is strictly prohibited that advance can only be given against the time deposit receipt or fixed deposit receipt of the same bank only, and not any third bank over there. It is strictly restricted, and banks may give an advance of up to 80 to 90%. The margin amount may differ from bank to bank, and also the banks do charge 1 to 2% extra interest rate above the contracted FDR interest rate over there. And further, the fixed deposit receipt against which the loan is to be taken, against which the DL, that is demand loan, is to be taken, the FDR is to be surrendered over there. Surrendered means that must be surrendered, and further only after that the DL will be given to the person over there, right? That's the case. And further, it's related to renewal of FDR. Now, if I have given a auto renewal particular standing instruction over there, okay, if you have given the auto renewal instruction, in that case your FDR will be renewed automatically. It will be renewed automatically. But if you have not given the instruction, in that scenario the FDR will not be particularly you can say renewed automatically over there, and further it will be in the outstanding mode over there and for the overdue mode over there, and you will be earning only the interest rate which is applicable for the saving fund accounts over there, right? And after the passage of 14 days, let's say case that your FDR was maturing on 1st of April. It was maturing on 1st of April and you never visited the bank up to 20th of April, and after that the renewal cannot be done from the back date. A renewal cannot be done from the back date. A renewal can be done up to the 14 days of the passage from the maturity date only, and not after that, right? And further, for this particular period you will be paid the simple interest rate only, simple saving fund interest only, right? So that's the case related to it, okay? And further, it's related to 2-in-1 account. Now 2-in-1 account is basically related to where the two financial products are combined together. Let's say case you will be getting the benefit of a fixed deposit account, and also you'll be getting the benefits of the saving deposit account over there, right? And it basically indicates saving fund account with the auto sweep facility. Let's say case that you're basically maintaining a balance of rupees 1,25,000, and you have basically given the instructions related to the auto sweep above rupees 25,000. So whatsoever the balance that will be remaining in the account above rupees 25,000, in this scenario rupees 1 lakh over there, FD will be credited automatically. A fixed deposit will be credited automatically from this particular amount, and further you will be earning the fixed deposit interest rate on this particular amount. And let's say case when you need to debit the amount, let's say case you basically presented a check amounting rupees 1,02,000. Now in that scenario, if you will be basically going to present a check amounting rupees 1,02,000, your amount will become lesser than 25,000. Now this FDR will be broken automatically, and this is basically said to be the reverse sweep process. This is the reverse sweep. This is said to be the reverse sweep when your FD is actually broken down, and further your payment obligation is met with, right? And further, when the balance is not utilized and you are having a surplus above the auto sweep balance, then FDR will be credited itself, right? That's particularly said to be the reverse sweep and the auto sweep. I hope that you must have understood, right? And further, amount is actually in multiple of 1,000 over there, or any other amount that is stipulated by the respective bank in case that is particularly being transferred to the FDR. Further after that, it's related to the recurring deposit. Now, when you're basically going to deposit the amount at a fixed regular interval, a fixed amount is to be deposited over the time period over there, that basically forms a recurring deposit. And further, the frequency can be monthly or quarterly, that particularly depends, and further that can be predetermined over there. And at the end of the recurring deposit tenure, the depositor receives the maturity amount, which basically includes the principal amount as well as the interest component which is being earned over it, right? And who can open a recurring deposit account? A person can open a recurring deposit account in its their own name over there, and it can be also in joint name over there. A minor is also allowed to open a recurring deposit account. Now, it may also be the case that there is a delayed payment. So whatsoever the amount which has to be paid, which was actually to be deposited periodically, let's say the case there was a delay, that you were to deposit the balance on 3rd of March or 3rd of the every month, and you basically failed to deposit such amount. In that scenario, a penalty will be levied. So there are two options with the depositor over there. Either you can be depositing the penalty yourself upfront and you will be receiving a full-fledged maturity amount as given by the bank to you, or it may be the case that you have not deposited the penalty upfront, and further in the maturity amount, your penalty amount will be deducted. And you will be paid the balances, right? So this can be the scenario related to it. Further after that, it's related to unclaimed deposit with the banks over there, that is defined under section 26 of the Banking Regulation Act. That's basically related to the depositors education and awareness funds. Now, for those particular balances in the saving fund account and the current accounts which are not operated for more than 10 years, or the term deposits which are not claimed are overdue for 10 years or more over there from the date of maturity, the balances are basically said to be the unclaimed deposits over there, and such amounts are transferred to the DEF account, that is a Depositors Education and Awareness Fund, that is particularly transferred to. And further, on the basis of the same, the banks do submit a report to the Reserve Bank of India on yearly basis, right? And further, that's related to the unclaimed deposits over there. Further, it's related to nomination facility. Now, nomination facility is actually available in all types of deposit accounts over there, for all type of deposit holders over there, irrespective of the nomenclature which is being used by the banks. So nomination facility is actually available in each and every account type over there, and central government has actually framed in consultation with the Reserve Bank of India some rules which are said to be the Banking Companies Nomination Rules 1985, and with the new provisions which are covered into the section 45ZA to 45ZF over there. So these rules have been covered related to nominations which do prescribe the same. Now let's have a look at the same of this. Look at this over here. So these rules actually related to the nomination rules are 45ZA is basically related to, you just need to remember ACE DSL. You need to remember the ACE and for the DSL over here. Now 45ZA is actually related to deposit accounts, 45ZC is related to the safe custody of articles, and 45ZE is related to the locker accounts over there. Now these questions can be asked directly, that which particular section is actually related to the nomination rules of what category of the accounts over there. So you must be memorizing what? You must be memorizing ACE DSL. Now ADSL. So 45ZA is for deposit account, 45ZC is for the safe custody of articles, and 45ZE is actually for the locker accounts over there, right? Now let's understand the features. Now this facility of nomination is actually available for deposit accounts and articles in safe custody and safe deposit vaults over there, and nomination facility can be availed in the savings and the deposit accounts over there in the individual capacity. Now in case of the deposit accounts, when we are talking about the deposit accounts, only single nomination is allowed. Only single nomination is allowed over there, and no joint nomination is allowed. But in case the locker is opened in joint name, in case the locker is opened in joint name over there, in that scenario, as per the IBA recommendations, 2 nominations have been allowed. 2 nominations have been allowed in that scenario. Okay, so the nomination can be done in favor of one person only as per the guidelines, and nomination in favor of more than one person is permissible in jointly operated locker accounts with the common consent of all the account holders over there, right? So that's the case related to it. And the nomination can be changed at any time, and further can be cancelled any time, modified any time, and further it can be made anytime during the lifetime as per the process over there. Further, it's related to settlement of claims in respect of the deceased depositor. Now we must be adhering to the provisions of 45ZA to 45ZF over there of the Banking Regulation in 1949, and also related to the Banking Companies Nomination Rule 1985, which basically facilitated the settlement of the claims. So these basically these two things related to section 45ZA to ZF and Banking Companies Nomination Rules 1985, these facilitate the settlement of the claims in respect to the deceased depositors. Let's have a look at it. First of all, accounts with survivor or nominal clause. So when you're having the survivor clause, let's say case A and B are having the account, where A is former and B is survivor. So let's say case they have made the C the nominee, and A is now deceased. In that scenario, where the survivor is present, there is no role related to the nominee. So nominee will come into the picture only and only if both and all the account holders are dead or deceased. Only then the nominee will come in picture. Otherwise, there is no role related to the nominee. Okay. So here we are having the survivor with us. So survivor can be operating the account of their own, and they can be taking the control of the account of their own, right? And further, the funds on the account will be transferred to the survivor account holder over there without the need for any legal proceedings which are not required. Okay. And when the nominee clause is there, let's take the case over here that A and further B are having the former and survivor account, and A and B both died, and C is nominee. Now in that scenario, the bank can actually be clearing the dues, and further can be paying the amount to person C over there, because now person C over here is a nominee, and further person C is a designated for the account over there, and the funds will be paid to the nominee on the account holder's death, right? That's the scenario. Further, it's related to accounts without the survivor or nominee clause. Now let's say case the account is in the name of person A and there is no nomination present. Nomination is not present. What will happen in that scenario? In that case, the succession certificate is to be obtained from the court of law, and further after the death of person A, that succession letter will be submitted by the legal heirs of person A. The legal heirs of person A will be submitting the succession letter to the bank over there, and as per that, the settlement will be made jointly to all the legal heirs, right? So particularly the succession certificate or the letter of administration is required for the settlement purposes. Further, it's related to premature termination of the term deposit account. Now let's say case you made an FDR and further you want to premature break it down, right? Premature termination is to be done. Now in that scenario, you may be giving an application to the bank and premature withdrawal can be made, and whatsoever the contracted rate of interest, whatsoever the penalty that will be charged, and the rest of the amount will be paid to you along with the interest, right? And further, let's say case A and B both jointly operated the account and operated the FDR, and further they want the premature termination. In that scenario, they jointly will be applying for the termination, and also the case whether the particular account operations are either survivor or former survivor, these operations will be effective after particular the premature withdrawal. And if they want to do the premature termination, in that scenario, consent from all the account holders is required for premature payments over there, right? That's actually the scenario which is actually to be cleared with, right? And further, as per the Reserve Bank of India guidelines, banks should settle the claims. Now let's the case when we are talking about the claims related to the deceased depositors over there, relating to the payments of survivors or nominees. In that scenario, where the nominees are there, or the survivors are there, in that scenario, the settlement should not be exceeding more than 15 days. It should not be exceeding more than 15 days, and within 15 days the settlement must be made, and 15 days must be counted from the date of receipt of the claimed particular subject to the production of proof of death or letter of administration or suitable identification, whichever the things are required by the banks over there, right? From that particular date, within 15 days the settlement must be made in case when the survivor and the nominee are present, right? Further, related to access to safe deposit lockers, return of safe custody articles with survivor or nominee clause. Now let me just tell you, if the sole locker hirer nominates a person, let's say case person A has nominated person B over there. In that scenario, person A is now deceased. The bank will be giving access of the locker to the nominee over there, so that the nominee will be having the liberty so as to remove the contents of the locker in the event of the death of the sole locker hirer over there. That's a simple case. And the second scenario is related to, in case the locker was hired jointly with the instructions to operate under the joint operations over there, and further the locker hirers have nominated the person, and further in that scenario A and B were joint, that was jointly operated, A and B both died, and C is a nominee. Now C will be having the liberty so as to remove the contents, right? And further, if let's say out of A and B only one person is deceased and person C is the nominee over there, and person C is the nominee over there, in that scenario, as I told you that in case of jointly operated lockers, A and B can be appointing the nominees of their own. Let's say case A has appointed person D as the nominee and B has appointed person C as the nominee. In that scenario, the nominated person D and further the survivors B, they can jointly be removing the articles. They can jointly be removing the articles over there, right? That's the case. Further, it's related to access to the deposit lockers or return of safe custody articles without survivor nominee clause over there, when no nomination is explicitly available. Let's say case there was no nomination available and further no survivor is there. In that scenario, letter of administration is particularly to be submitted, and further this particular legal succession certificate is to be submitted, and further only after that the letter is to be submitted, and bank, after verifying the facts and figures, the bank can give the joint access to the legal heirs or the survivors to wish to use the locker over there, or as to remove the particular, create a new agreement for the same, and further so as to adhere with the KYC documents over there, and so as to remove the articles over there, right? So that is to be meant with. Okay. So that would be all related to this particular video. I hope that you must have enjoyed the session, and further you must have enjoyed the contents related to it. So do enroll right now. You can rate our video right now. So do rate the session over here, and further do rate it out of 10. And don't forget to like this video and share this video. And the full course is available. You just simply need to visit our website, that is jaib.learningsessions.in, and simply just on sign up you'll be getting access to all the PDFs free of cost over there. So simply sign up over there and further start preparing for the same. So thank you so much, and see you again in the next video.